What's up, YouTube? Welcome to the Retire Rich Club channel. My name is Lyndon Jr., and it is my pleasure to discuss with you the latest news in the stock market. Before we continue, I want you to know I'm not a financial advisor, and these videos are for educational purposes only. All right. With that said, I hope you are all doing well. I hope your families are doing well. Okay, that's what we do in this club. We make sure everybody's good. All right. I want to recap this show from last video number 2, and I want to talk about the SPY, the S&P 500 stock, right? I said that 5 years ago they may have been around the upper 300s. I was wrong. I fact checked what I said, and I got the exact numbers for you guys. Okay, so 5 years ago, the S&P 500 was at $210. It is now at $426, giving you a 5-year return of 103%. Yes, that's right, 103%, 5 years. I also spoke about the company Nivida, right? I didn't give Nivida the proper respect they deserve and give you guys a better description of what the company is, okay? So Nvidia designs and manufactures computer graphic processors, chipsets, and related multimedia software. Now, when I read this, I asked myself, what are chipsets? And chipsets are usually found on the motherboard and is in a integrated circuit known as data flow management system. Their technology allows supercomputing for autonomous robots, drones, and cars, as well as mobile gaming and entertainment devices. All right, so that's when the video chips get into. Now, as far as what we like to talk about, which is investing, what's our return? On January 3rd, 2020, Nvidia cost was $236. It is currently at $761. That's over 200% in a year and a half. All right, this stock should continue to go up faster as they dominate the niche that they're in. All right, I thought Nvidia was in the same group as AMD, MU, some of the other chip companies that are big to mention. But as I researched what's going on with Nvidia, they seem to separate themselves from the pack in the kind of chips that they provide, which is this whole autonomous driving and all this extra GI robot chip stuff. They got that down pack, and that's why their stock is going up. And if you notice, AMD, MU, these other kind of chip companies that are very important, they kind of been in this uh, consolidating, went down a little bit from their highs for the year, but Nvidia is flying up. So when the stock market tells you that a stock is of high value and it's going up, sometimes we have to take heed and check and see if it's real. And this company is real. They have a niche. They're a little different than the other ones, and somebody's doing a lot of buying, and that should be us as well. All right. So keep an eye out on Nvidia as this company. They also have a stock split coming up. We spoke. I don't know. We didn't speak about stock splits last week. Okay, so a stock split for some of you that may not know, right? Whatever company that announces it, let's say you have one, to keep it simple. If you have one stock, and then let's say they announce a 4-to-1 split. That means if you have one stock, after everything is said and done, you have four. You have of the same value that the stock had, but it's just that instead of having one, you now have four, or whatever number they say you're getting for that one stock. Now, you ask yourself, what is the purpose of doing that? The price goes down, right? Because now you're giving more shares to you're giving more shares to the market, which is bringing the price down. And some people say it's a marketing strategy that some companies like to use when their stock gets a little expensive and they want to reach out to more investors or with different pockets basically. All right. Some companies tend not to do it or take a long time to do it. All right. You can look at Amazon and you can see that Amazon's price is about they're 3,000, they're about 3,400 and change. All right. So I mean, if anybody needed to do a split, you may think it should be Amazon because they're kind of expensive. But I also read that some companies like to have their stock kind of pricey. I guess like a bougie thing, when they feel only a certain kind of investors are going to be buying it. That I mean, there's fractional buying that some brokers offer. As I said, the first video, you could buy fractional shares, so it really doesn't hamper us from getting into these expensive stocks once we can get the fractional shares. But that's kind of my information I received or read about. It makes the price cheaper, which tends Apple does this a lot. Apple has split a few times, bringing their price down, and they continue to go up, and then they split. They've done it a few times. A lot of good companies do it. It's usually a good indicator that they're doing so well so fast that the stock price is just going up so quick. They want to bring the price down to keep you guys engaged, keep you guys in the game. All right. So shouts out to Nivida. You guys doing some good stuff over there. All right. I also mentioned BlackRock. Spoke about BlackRock last video. I didn't give them their respect for being a good company and giving you guys more information. So I did some homework, did some more reading, and let's get into BlackRock. All right. BlackRock provides investment management, risk management, provides advisory services for institutional and retail clients worldwide. Okay, worldwide. Their products include single and multi-asset class portfolios, investing in equities, fixed income, alternatives, and money market instruments. Now, when I read this, I asked myself, what is money market instruments? Like I told you guys, I don't know it all. I'm always learning, I'm always reading. And if something may be unknown to me, it may be unknown to you. So we'll both learn something. That's what we do on this show. So money market instruments are securities that provide large amounts of low-cost capital for a short time, usually within a year. All right. And I said BlackRock was one of the largest. No, they're not one of the. They are the largest. Okay. They're the world's largest asset manager with over $8 trillion in assets under management. Okay, so these guys, the good folks at BlackRock, are managing over $8 trillion in assets. So not only am I bringing myself, but I'm bringing you guys, the whole club, to them to help them give us a good return. And I have confidence in BlackRock. They've been doing it for a long time. Like I said, they have such a diverse way of making money besides just stocks, right? So you can hedge yourself with what I've been reading about. They call fixed income, equities. You're getting all that when you invest in BlackRock. All right, so BlackRock, that's why I put BlackRock in our strategy from last video where I said to get 3 ETFs and to add BlackRock as a different company that's going to help give us a good balance. All right, so we like BlackRock over here. Shouts out to BlackRock. Now, as I was doing some of this reading, I came across a stock that has been doing great, and it blew me off my chair. Let's talk about Crocs. Yeah, I said it, Crocs. Did you know that Crocs is up 233% in the past year? All right, so you guys may want to keep an eye on this company, all right, because they're expanding globally and they seem to be introducing new products soon. I think they want to put out some sandals. That's right, they want to get the world wearing sandals again. I hated sandals growing up as a kid. I may wear them if I don't know the occasion, but I'm open to wearing sandals. Yes, I said it. But growing up, hated sandals. Mother always told me to wear sandals. I said, no, I don't wear sandals. I wear sneakers or shoes or boots, not sandals. But if anybody could do it, Crocs could do it. Crocs can get us wearing sandals because they got you guys wearing those funny looking things that I hear are very comfortable. All right, so shouts out to Crocs. I think they still have room to grow. If everybody keeps on accepting them and liking them, we may have to add Crocs into our, small cap or maybe their mid cap. I think they're around 7 billion in market cap, but they've been doing good, surprisingly. So Crocs, 233%. Who would ever figured that out? And earnings. We love to talk about earnings on this show, right? Nike had a great earnings report, and they appear to be on track for another year of dominance, all right? They've stepped up their digital marketing, and their overall growth is doing great. So, shouts out to the good folks at Nike. All right, if you're making money with Nike, leave me a comment. All right, Nike's doing great. FedEx on the other side didn't do good with their earnings. FedEx, they have some labor concerns, all right, that brought them down. Let's see where they go from here. FedEx is another company that's been around for a long time, but the labor concerns, I have to get into what are these labor concerns, if it's wage or the number of employees. I'm not sure what's going on there, but it's definitely spooking investors going forward. All right, FedEx did pretty good during the pandemic as more people got deliveries done. Everybody was staying home. We know how that goes. Amazon did good during that time and is still doing good at that time. But I guess investors not sure if FedEx could keep up with that demand along with this labor concern. So I'm gonna look more into that for you guys and see what's going on with this labor concern in FedEx. All right. Now I spoke with a good friend of mine about the show, and like I said, I'm trying to cater to different interests. All right. He expressed to me that he likes news. He likes stock news, just good old fashioned stock news. I said, you know what? I'm gonna put together. I'm trying to be consistent with giving you a little segment of news for the week. All right. So hopefully, as I learned this production, I'm the video guy. I'm everything right now. How to add these little cool things into the video sets. You might hear like a nice little segue into the news category. All right. But for now, we'll keep it simple and old fashioned and just dive into this in stock news for this week. So Microsoft made it to $2 trillion this week. Shouts out to Microsoft. All right, we know they're just a great company that keeps winning. That's why I keep telling you guys, you go with the winners, you're going to win. It's boring, it's not exciting, but if you just want to, if you're like me and you want to get to this money, get a good return, you just want winners, and Microsoft is one of them. All right. Excuse me, y'all. Microsoft is up 2 trillion. Microsoft up to $2 trillion in market cap. That's great. Bond yields are growing low. They're going low. Equity sector could rise. China cut down on Bitcoin mining. That brought Bitcoin down. So for all my Bitcoin investors out there, I'm a little sorry if you took a little loss this past week, but you guys should be all right. All right, Bitcoin should go back to where their previous highs in due time. But China cut down on some Bitcoin mining. That was a big thing. Google advertising business is under investigation. NASDAQ jumped to a record high on Tuesday. And the Federal Reserve announced that they are far away from removing crisis era assistance to the country, right? So I told you guys earlier, the stock market is full of drama, all right? And as we go through this inflation back and forth story, right? The Feds announced that they're not going to do much of anything right now. Investors like what they heard, and guess what went back up? Our favorite tech stocks. All right, so that's the back and forth that's going on. Got to deal with it till we get over this. I believe they know the Feds have to at some point increase interest rates. All right, I guess they're just happy that they're not doing it right now, and we'll stay locked in on what's going on with that as well. But this is why I also want to stress to you guys: hold good companies, because the market's going to react to this inflation thing back and forth, but you don't have to worry about where these good companies are going to be once the rates go up. At the end of the day, they got to stay with the winners. So they might go back and forth, but at the end of the day, you stay with the good companies, you're going to win long term. And that's what we're doing over here, trying to win long term. That's it. All right, so I'm also thinking of doing a consistent part of the show, like picking I did that last week, fast moving stocks, but I also like the name stock of the week. Just giving you guys some good information on some stocks that come to my mind, my attention, and I want to share with you guys how well these stocks are doing. So for the stock of the week, I'm gonna go with Google. All right, I came across them during the news segment, during the investigation, but after I got past the investigation, I said, my, Google has been doing so well in the last 5 years and even going further back. All right, so let's get into what these returns would have been for us. All right, so 1 year ago, you would have had 77% with Google. Okay, their year to date return is 44%. Their 5 year return is 276%. All right, so advertising business is doing amazing. And post pandemic, they have just gotten bigger and better. All right, so you look at that Google 5 year chart, you'll see what I'm talking about. I mean, this past year they've moved so fast. All right, so I mean, I'm even thinking of maybe at some point holding them as an individual company. I gotta wait to see what happens with this investigation to find out if they may split or whatever they want to do to them. Leave them alone. If Google goes to the same drum that they've been beating to, I definitely will want to invest with them because I underestimated them and I mean, I know they're a big company, but I really didn't know they were doing this good. So bring it to your attention as well. Put them on your list. All right. I want to talk about, before I close out, my Instagram. All right. You guys can follow me at Retire Rich Club. All right. On Instagram, you can see some of these plays that I'm in. Like I said, I don't do videos every day, but I'm always giving you guys some stock picks on Instagram, giving you guys some indicators of what's moving, what broke out, what's in a good buying range. So you guys got to really join me on Instagram, get into these plays, and share it as well. One play that I jumped on early that I didn't bring to the show because I was waiting for it to get a little bit of volume before I brought it to you guys. When I say volume, I mean you can see what the average, you can see what the amount of volume is every day with a stock. And I was looking for a key indicator when they reach to a certain level of volume before I told you guys to jump on them. So Tesla had a great week as well. That should have been the stock of the week as well. Tesla did great this week. They finally broke out from where they were when they were going back and forth with as far as price, and they almost reached $700 this week. All right, so they pulled back a little bit, but they're gonna get back past 700 soon. All right, so I got in at $600, and I really thought it would have took at least a month before they got to 700. But that's one thing about Tesla. Tesla moves very fast. They go down quick and they go up quick. All right, so they moved so fast this week that I had to readjust my evaluation of where I thought they would be. All right, I'm in a good play that I hope I can tell you guys about come September. I gotta wait 2 months before I can show you guys in this big play I'm in. But I have Tesla going past 700. That's not even at this point hard to believe. All right, so they were, and this is why I also want to tell you guys, on this show, there's so many plays that I'm watching, but I only want to give you guys plays that I'm very confident is even worth your time of looking into. All right, because all we want to do is win in this club. But Tesla was at a low 200-day moving average, and that is just to say that nobody was really buying them at the time, and that's where I noticed and was waiting for some indicators to showing when to buy. And when I saw it, I had to jump on it. I think that it happened after I made the second video, but they were on my radar. I was watching them, and this week they broke out. So Tesla's a buy. If you're into Tesla, if you've been buying them, you get ready for a good run up. They have earnings coming out, I believe, ending of July, beginning of August. If those earnings are good and the market is satisfied with what they're doing, which I'm confident it's going to be a great earnings, they're going to fly fast. So these prices you're seeing Tesla at, 600s. If you believe in a company, right, you should only be buying companies you believe in and that they have a good, solid plan. Tesla's one of them. They're a growth company and they're making money at this point. they have a long way to go as far as how much growth they could reach, and that's why they're so expensive, or the valuation is so high, because of this massive growth and this niche that they're in. So I really like Tesla. All right, and I told you I jumped in at 600. I think they're at 670 or 680 now, or towards the weekend. All right, so put them on your list. Get in if you can. All right, shouts out to Tesla. So check out the Instagram, as I said. All right, and real quick, I want to get into real quick, because this is going to be a bigger topic next video: investors versus traders. I had a good conversation with a buddy of mine about stocks, and he rose that point about investing and being trader. And asking yourself, what are you? Are you an investor or are you a trader? All right, think about. Let me ask you that question when I drink some water. Are you an investor or are you a trader? You think about it real quick. All right, so what's the answer? Are you an investor or are you a trader? Okay, so traders, they trade every day, right? Or very frequent. Investors, they jump in and they're long term. I am a investor. I'm not a trader. I'm an investor. All right. And I want you guys to look into what the difference is between the two, if you don't know already. And even if you understand, really look into the psychology of what an investor's mind frame is and what a trader's mind frame is. All right, because that's going to really give you guys direction of how you should be buying, how you should be analyzing and reacting to what happens in the stock market. It was a great conversation. The brother of mine is, we go back. He knew me when I know nothing about stocks. I've come a long way. And, you never know who knows about stocks. And that's why I always talk to people about it. And you never know who has a lot of information that's useful and can guide you to certain places, man. So when it comes to this thing, when it comes to life in general, never underestimate what somebody may know. You'd be surprised who might just give you some real good information and get you where you need to be. So shouts out to him. All right, great conversations about stocks and investing. But yeah, are you an investor or a trader? All right, know which one you are, and then understand what's the behavior that goes with whatever choice you're saying you are. I mean, most of you should be considered investors, because let's be real, we're not day traders. Most of us are not day traders. We're investors, but really try to understand what's the psychology of an investor, right? And that would also prepare you for how you're going to handle, being the CEO of your account, the money you put in, the stocks you buy, how you're feeling when the market is down, why do you want to get out? If you bought something at the wrong time and you're starting to lose money, rather than selling and taking a loss, stomach that feeling of being in a losing situation, but then turning around and tell yourself you just bought in at the wrong time, right? If the company is still solid, the company is still doing good. Sometimes as an investor, you just get in at the wrong time. Sometimes it's due to lack of research. Sometimes it's just bad luck or bad timing. Some things you can control, some things you can't. All right. So I want you guys to really, I've been doing that, understanding the psychology of an investor. All right. Looking at things in a different perspective. That's going to give us an edge and dominate the stock market. All right. Tesla's a good example. They came in high 2020. They came in high 2021. They had a good run 2020. And a lot of people started selling it, right? Because the valuation was too high. They felt that they reached that evaluation too quick, blah, 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 blah. So that was a key time for investors to start buying Tesla little by little, because we believe in what's his name? Elon Musk, right? We believe in him, and we know what they're the best at what they're doing. These other guys can't catch up to them. So these were buying points as they went down, right? I'm gonna close with the topic with this question, and I had to ask myself this as well. Why is it so easy for us to buy stocks when they go up? Right? It's psychological. Something is green. You say, "Oh, I'm missing out. I'm missing out on making money. I gotta buy it quick. I have to buy it quick." You have this, and I've been there. I'm not judging you guys. I'm just sharing the growth and investing, and that's where I'm at this point. Is not always chasing the green. All right. That's why it's good to buy some companies, and when they run, you already have an investment with them, so you just reap those benefits. But don't always chase the green. There's always a better buying point if you weren't already in the company. All right. But ask yourself, why is it that we're so quick to buy when the stock is going up, but we don't buy when the stock is going down? Naturally, you're going to say, because the stock is going down, nobody wants it. But that's where, as an investor, you have to do some homework to figure out what's really going behind what's being seen. All right. If we master this as a club, you guys will be telling me what picks, the stock market is getting wrong, and they might be turning their back on them. This is what we're gonna do. All right. So Tesla, great example. All right. Some people bought in at the tail end, had no more interest in buying it, but people like us, we got in at 600, 580, and now we're gonna go for a bull run that I hope takes us back to the highs. All right, so let's talk about this next video. The 4th of July should be next weekend, if I'm not mistaken, so I may not do a video. So I want to tell you guys happy 4th, if I'm correct, right? Because the 28th is Monday. Bear with me, y'all. Yes, the 4th is next weekend. I look at my calendar. All right, so I'm probably not going to put a video out. I'll probably actually enjoy the weekend, all right, and get ready for the show after that. Give you guys a good show. All right, I hope you guys learned something. All right, I hope you guys subscribe, like the video. All right, I told you subscribing is a big thing. Help your boy out. Help us reach more people. All right, and let's close it with these 3 keys. Everybody should be saying this all together, holding hands. What are the 3 keys in the stock market? Know what to buy, know when to buy, know when to sell. You take those 3 keys, you dominate anywhere in the stock market. All right. What's another phrase that I like? Investing is not only a choice, but it's a skill. If you're not in the game, get yourself in the game. All right. If you're already in the game, then make sure you're on your A game. All right. And if you're on your A game, I'm going to see you there. All right. Till next time. Next week, hopefully. Peace and love, y'all.